Awesome. There we go. Sorry, just moving things around. Man, do we call this or what? Well, you guys let me know. Uh, we were talking about this. Awesome. Oh, sorry, a little bit of echo. Give me 1 second. Sorry, I forgot to push one button. Give me one more second here. Just one button. Okay. All right. So, do we call this one or what? I mean, again, it's not always guaranteed, right? V's giving a big giant yes, right? We totally called this one. If you look at this, right? Look at this. Oh my gosh, we were literally right here. Like I was just saying, like, look, it's 19% up year to date, the S&P 500, and I think, at this trajectory, half of the year approaching negative seasonality. Oh, that's right, V. Oh my gosh, thank you so much, V. Let me start the recording. We don't officially start until the recording start. So let me start that recording. Uh, in which case, where's the button? Okay, give me a second. Because I am doing something new a little bit here. Record to the cloud. There we go.
Recording in progress.
All right, recorded just starting. All right, so welcome, guys. As we were saying, the question was, man, do we call it or what? Massive selling action in the marketplace. And, at the time, right, it's hard at that moment to, determine where the markets would go next. It's always dealing with probabilities, right? Like, there's no way that, it's just, you'll never be 100% correct. And you have to accept that. But what you will always be 100% on, hopefully, is risk management, right? And so, if anything I learned in this, this selling off event that we're seeing, the market correction, is that if you respect your risk management, you will always be okay. V says you called it, and it is great how you have gotten better at higher probability predictions. Exactly. So I'm excited about it because like I really feel like almost after 10 years now, I got a really strong grip of like how the markets move every week. And look, if we could predict moves like you saw this week, like come on, like oh my gosh, like if you could really predict these moves, there's just substantial money on the upside and on the downside, right? Like we're talking about, we were right here. Look, so this is again for those of you who don't know, this is the S&P 500 index seasonality. Basically, I'll remove the red line. The blue line shows the quantitative performance of the S&P 500 over the last 30 years, right? So again, we use quantitative mathematical efforts to calculate the average performance of the S&P 500 30 years, we aggregate it and we average it out, and this is the average performance. So typically, based off this average performance, we can it's not 100% accurate all the time. What it is just a baseline analysis. Okay, we treat it as a baseline model, like how data scientists would perform, and that baseline model gives us an expected. Okay, like if markets are oversold or overbought here, what's the tendency for it to happen in these months? So that's basically what we did, right? And so 2, 3 weeks ago at day 135 right here, which was the red now shows the current year's performance. The S&P 500 was up 18%, 18.81% year to date. And so that was pretty extensive already. And so the thinking is like we got to pull back. If not, then we're on the trajectory to go like 40% at the end of the year. That won't look good in terms of like politics, right? It's just like whoa, like S&P 500 perform 40%, central banks. Like, are we in a banana economy or whatever it is? Right? Like, can I really take prices around me seriously now? Right? It's just like manipulation left and right. So very important as we're all learning. Right. So, anyways, we were up 18.8%, and even at the time, if we watched the recording, right, it's all in the recording. Now, the recordings are only for the Patreon members, by the way. If we watched the recording at the time, right, at the time, I'm thinking like, man, it's like 19%. I even said it could go higher, but we know that there's a probability that it'll turn, and we need to expect that. We need to anticipate that. And now what we have is like a pretty massive correction. I mean, it's still not that bad, right? So if you look at it today, the S&P 500 right now is up 12% year to date. So we're still up year to date. We needed that correction, right? And so the analysis that we performed right before this thing, turned the other direction was basically this right here. And let me annotate. Let me pull out the annotation tool. I see some comments from V. V says, "This is all any of us can hope to do. My latest effort is based on your recommendations to become great at risk management, which has killed me in the past." Yeah, I honestly think, like, again, remember what I said, like when all of us starts our investor journey, we start off with like looking for opportunities, right? Looking for wins, and some of us we try to be cheap, and cheap doesn't work, right? We try to be cheap. And then on the risk management getting out, we're stubborn. We don't want to accept a loss, right? So this journey in like, I guess, like trading, investing overall, I think it's a journey of like you as an investor yourself, personal development, mastering your ability to risk manage. Like risk management is the last topic that we focus on, but I feel like, now looking back, it should have been the first topic, because if you just focus on risk management, you're just like, that means you have like almost like, I wouldn't say unlimited tries, but like a massive amount of tries to get it right, but you're always managing risk. So again, that most people make it a chapter 10 focus when it should be chapter 1. Most people focus chapter 1, which is like, hey, what stock should I buy? Without thinking about like how to manage risk. So yeah, and to this day, I'm still managing risk too, right? And I think I could be a lot better. And I view it as I'm going to become better by teaching and articulating this stuff and just sharing my experiences and insights, right? Um, Nancy says, "What is the best risk management tactic now?" I just got on the call in case you talked about the beginning of the call. So we'll get to risk management tactics. It's going to be like basically like spotting the levels, and you have to live and die by those levels, right? Because if the moment you're like, "Oh, it hit my level that I was going to stop out and get out," and you're like, "I'm not going to get out," then that's where the mistake is, right? So you have to have conviction on your risk management levels. Like, hey, I'm going to get in right here. I expect it to go up, and I'm going to be in the green already. If it doesn't, then I'm going to get out. And I realized like that could have saved me so many times in the past, and I would have, saved a lot more money and made a lot more money if I just respected my risk management. And again, I realized like that's just something that you'll never learn in the first year ever. Like the trick is like you might see like on like, marketing of like the investor lifestyle or trader lifestyle, like mansions and supercars. But like the reality is like that only gets you in the door of like the first year of like learning how to do this, right? But then like the reality is that I think it takes like 5 to 10 years plus of learning risk management. So again, that's just the nature of marketing, right? The marketing will sell you like, oh, you should have done all this up front. This is the lifestyle you could have. And then the reality is like you go through it and you go through this crazy roller coaster of an equity curve, right? You see your net worth go up and down, and then you realize over time like the reality is that you just got to put in time and hours into this, analytical hours into this, just like any other practice on this planet. Because like you're playing against like other sophisticated players on the other side as well, right? But yeah, that I mean, after a while, that is also the reason why it gets me so darn excited about this game, because this game is like it's so dynamic. I know everyone's either directly in mostly everyone is indirectly playing or either playing, right, directly playing. So hate it or not, like everyone, right, even a child is playing this game, because maybe the child might not be making, frequent economic transactions, but the parent of the child is frequently making economic transactions. And you can see that via the stock market portal, right? But the problem is, right? So real quick, I got 15 spots left before I lock this up, and I'm pretty firm with prices. So once I lock this up, the first 100, you guys are like lifetime for free, right? Then I get to 100, it's pretty much locked up. And then you gotta go through a paywall. And I'm gonna be increasing prices because I was breaking down the costs, right? I'm sharing some of the links in here. This is one of the articles or posts I shared right here. These are all the tools that I use in here, right? And because I want to bring this up because I was talking about stock portal. Like how do you get access to the stock market? What I noticed in the past is like when you're being cheap, right? I'll give you an example, right? So if you look at this, these are all the tools not all the tools, there's actually a lot more, or quite a bit more. but I put in all the expenses of all these tools that cost me, right? Like Google Focus, $1,300 a year, $139 a month for Sentiment Trader, TradingView, $600 a year, etc. Right? So it's funny because like I talk about the stock market portal, and I've seen people in the past where at my investment club, it's like, hey, they ask me like, hey, Kay, what do you use? And I tell them like my number one favorite tool is Finviz Club, or sorry, Finviz, and they'll go to Finviz and they'll use it, but they'll use the free version. So like being cheap using the free version, you have ads that like get in the way of your analytical process. Like this game is very like it's intangible, it's very analytical, it's very abstract, and you really need to refine and hone your abstraction skills of analyzing things, right? But people are so cheap that they'll just use the free version and let the ads like hit them. And to me, that like I hate that. I'm just like, nope. Like even like YouTube, right? Like block all those video ads. Like you like they do not deserve 30 seconds of your time. That's just not worth it. That's like the margin right there, right? That's where they're capitalizing on you. So it's like to me, it's like I'll pay the premium for no ads because I need to focus on my analytical work. So, anyways, that's what I mean by stock market portal, right? The thing is, the vast majority of people that I've taught, I've realized like they have really, really shitty access to the stock market because they'll use like, a cheap Google search like, well, this stock up or this stock down. They'll use like the free version of Finviz and there's advertisements. They'll use whatever. Like, it's just stop. Like learn to pay up for like a premium tool. And like this one's pretty decent, like $300 a year, and you get like as you guys see, I teach basically on this platform, no advertisements, and I can see all the stocks, and I have it up on my screen like all day long. So again, that's like the first like beginner mistake right there, which is like being cheap about your education and not like paying up for like a decent portal just to act like it's just $300 or $25 a month just to access ad free, no advertisements, and you get to see the stocks like move in real time. Like, come on, like this Finviz tool is really, really good. I mean, I'm glad they don't charge more, but like to me, it's like it's really good, and I don't mind naming my club, my investment club, after this Finviz tool because I've been using it for the last 10 plus years. It's really that good, and you could see the entire world, every single stock in here, and you can make it pretty complex as well. So you guys see me use it, and I really like the tool like so much. Um, but I think the part that I want to emphasize is that people are being cheap, and that mentality doesn't get you far because if you're cheap, let's say you don't buy access to private events because you're cheap, so then you're always going to be surrounded by low, not as high quality people, right? If you pay for things, you get surrounded by high quality people. You pay for information, you get surrounded by people who are pretty serious about their stuff. Now historically, I've been pretty darn cheap with my stuff. I know that for a fact. I've been too nice, but moving forward, I think there will be the correct adjustments. But again, that's just my opinion. Now, going back to what I was saying, get yourself a correct stock portal. Don't be cheap on yourself. Invest in yourself. You are the best investment. Understand that whatever you see on the internet marketing stuff, like all that is like it's just to get you to get to the next step. But the reality is you got to put in the hours. So learn to put in the hours, and then you'll start to see opportunity, right? So in the last like I guess I don't know 10 plus years or whatever now, like I've seen I've just same thing with the news. Oh my gosh, like Wall Street Journal or CNBC, like it's just all like the experience is just crap because you go to their website, it's just a ton of ads just to get to the information, which is like I get it now. Like everywhere on the internet, everyone's like locking up their information. It's just wild. Because like I remember reading Bloomberg for free, right? When I first started. Now it's not free anymore, right? You gotta kind of pay for it. So this again, I still provide pretty darn high quality information, and this is looking at the S&P 500. Let's go back to it real quick. So this is what we were talking about, and I was just about to annotate. So let me pull up the annotation tool. On top of this, I'm also providing like the analytical services over here, providing you folks with the insights. So that's something you don't get with these other news stuff. So what do we know? We know that the first 3 months it basically went up, right? So 3 months beginning of the year, we know it ran, and we know the way markets run. It's like a horse, right? You can't expect the horse to run forever, right? Like, after some point, the horse has to take a break. So breaks are very healthy. So this is the break. Maybe I'll switch over and use red, right? But let's just say 3 months of run, and then we had another 3 months of run right here, right? Those are 3 months of run. And in the periods where we're taking a break, this is a period of taking a break. That's 1 month of taking a break. So what is it? 3, 1, 3. We were running for 3 months, and I'm thinking like, all right, we're moving into negative seasonality in August, September over here. and we were up 19% year to date on the S&P 500. So I'm like, this horse has to take a break. So I think there's highly probable side, trades on the other side. But little I know, it became like a more aggressive trade, right? Because in the last 2 weeks, we saw great companies like Lam Research drop like 30%. It's just wild, right? So what's the valuable lesson here? The valuable lesson is that I wrote it in the FinViz Club, by the way. The valuable lesson, again, I'm sharing a lot of value in here, just FYI. The valuable lesson is that no matter how much it drops, right? Hold on, where is it? I'm trying to find the Lam Research one. Uh, well, it's somewhere in there. Basically, what I'm trying to say is that look at this. Like, no matter the quality of the company and how important it is, right? No company, no matter how great, how strong it is, no divine asset class is safe from a price drop because humans get fearful, and that is permanent, right? Like that's just a like you tell me, are we having newborns on this planet who are just like, stone cold confident right out of the gate? No, like fear is a human thing. And because fear, it exists naturally among us humans, we need to really understand that psychology because that psychology right here could really show us like how much damage it could do to stock charts or stock prices. Look at this. This is just like 2 weeks alone. Like last week, I issued a yellow light for the first time, and then I watched this week. I'm like, this is totally red light mode. But I only issue it week by week. So now we're in like red light, and I'm thinking like, yeah, red light imminent bounce. We might bounce again because volatility is expanding. So now we're in a different phase, right? It's not a trendy phase. We're in a high volatility phase. And like, you won't know how to trade a high volatility phase because I myself included, because I mean, I've been through several volatility phases, right? The pandemic of 2020 and all the other years of like, lesser corrections. But like, people, the markets have short-term memory, right? Not everyone gets to trade in this environment. So I'm really thankful to be able to anticipate these volatility moments. Like if you go into my Patreon, right? Like this is valuable data right here. You go into my Patreon, I literally have like the 2020 recording, like 2019, end of 2019 recording, where 30 days before we went into a national lockdown, we were meeting in person and I was recording that in person 30 days before the COVID pandemic lockdown. I said, hey guys, like I'm looking at stats here and we won't be meeting next week, and I don't know when we're going to meet again. But what I know I'm going to do in the next 30 days before lockdown, I said I'm going to go stock up on inventory. So I'll see you guys whenever, right? And then after that, the pandemic happened, and then we didn't meet for like a whole month. And then after, I'm like, all right, we're just all locked at home. I started launching up the investment club purely online again. And then, that's where we had like 100 to 150 people for like a whole year because we were just all locked at home. So you see what I mean? We watched the markets. We recorded every single session in the pandemic, literally in my Patreon, like the whole entire time. And so if you saw that move and how the markets adjusted, man, like we could go back to those videos and just study that and see what it looks like this cycle, this time around. So I'm telling you, like it's these are moments where I think a lot of, if you're new to investing today, it's unfortunate, but it's also fortunate, right? It's unfortunate because like, I saw a Reddit thread where someone put like their inheritance of 700K into Intel, and then Intel dipped like, 30%, right? They just started investing and they're just like, oh man, I left a bad taste. So again, that's just the nature of it, right? Where we don't know when your introduction was to the stock market, but if you've been in the game for a long time, you kind of understand how it moves. And it really takes about, I don't know, like to see the full cycle of like I think like the business cycle, I think it takes about 10 years. Well, hold on. Like at this point, I think I've seen maybe 1 to 2 full cycles, right? Basically, you've seen the whole series, the whole movie. But some folks, they might have started like yesterday or this week. And so they might be starting, in the movie during like the declining phase of the movie, right? Versus like the happy ending of the movie, whichever. So it's tough out there, right? But what I've learned, we can learn a lot from all these moves that we're seeing in the markets today. But it's the hardest moment for a lot of people to pay attention because it's just very difficult, right? But it's difficult is, if we all focus in the beginning on risk management and just be religious about risk management, we'd be really happy right now and we'd be okay. But then, where I'm going with my career now, I feel is that not only am I trying to discipline myself with risk management, but now it's like, hey, wait, if I have my risk management here, this is what I'm thinking to myself. If I have my risk management here, why don't I just like turn it into a short trade and make some money on the short side? So then there's that, right? So we're evolving things here, I would say. Um, anyways, yeah. So look at this. Look at these declines. It's just incredible, right? We measured I think I measured already, but this thing's down 33% or 30%. Right? It's just what I came to conclusion as I'm developing more ideas around this is that it doesn't matter how divine or valuable or great the business is, right? In a volatility event, everything will sell off pretty hard, and there's nowhere to hide. Like the only place to hide is like cash or volatility, or maybe REITs. REITs performed a little bit this week. Actually, REITs did perform this week. But like, yeah, in events like these, there's nowhere to hide. Now, is this like bear market recession? Right? The news like to capitalize on consumers that way. I've seen it several cycles now, right? I mean, I think as worse as it gets, the pandemic, sell-off was like the worst of the worst. I don't think it gets that bad. If we get that bad, I'd be impressed. Like if this sell-off becomes bigger than the pandemic, I'd be pretty darn impressed. But I'm still, my view is still a bull market. My view is still like, hey, structurally speaking, the governments don't have money to fund all their expenses, and they need to print money. So I expect higher equity prices. I still expect higher inflation. This right here, this decline that we're seeing, I mean, this might be the emergency move that causes the Feds to basically put interest rates to zero. If they do that, then like cheap money across the board, right? There's going to be some very strategic decision making if that happens right now, right? But I don't know. I still am in the look. We take a step back, okay? Take a breather, right? It's not that bad. You take a step back and you look at this right here. This should ease your mind, right? Because like to me, I still think it's a bull market. I just think we're due for a break. The horse needs to get some water. Right? This is a healthy break right here because it flushes out all the weak hands. That's just the corrective mechanism of the markets, right? Being the intelligent market apparatus as it is. Sorry, I had to sip on my coffee over here. I bought this new coffee. It's called Purity Coffee, and the way they market it is coffee with no toxins, mold or chemicals or whatever, right? Clean coffee. I don't know. I think the internet's targeting me well, I would say, because like I've learned a lot about food and all that, right? And so I'm pretty convinced out there that the food supply isn't that great. But that's another topic for another day. I mean, the more I learn about just the global economy, it's like it's sad that like I'm not like I'm still optimistic, just to be clear, but I'm not as optimistic as I was like the 18-year-old me, where everything in the world was new and I'm trying everything for the first time, right? Now I'm an old man, I would say, and the experience is like I'm an old man where I know like okay, most of the food out there they serve you industrial oil that just is not good for your body, right? So you go out and it's like, that sucks. And then I look at taxes and inflation and I'm just like, this is just bullshit as well, right? And then I look at, what else? Prices inflating like left and right. Well, that is inflation, but just like, the food price increases, like you're just trying so hard to operate in this economy, but everything just works against you in so many different ways. And in me being an information specialist, I would say, right, reading all these different news streams and stuff, you realize like, this is actually pretty BS news as well. So in the end, it's like who's providing like really good news? It sucks out there for the average individual, and at 18 you really don't know any of this until I guess maybe like 10 years into operating an economy, you realize like, this is how it works. So yeah, like it's wild, folks. But anyways, back to markets, right? Let's not digress too far. Holy smokes, you just described my investor skills, cheap and stubborn. Yeah, I mean, don't worry. This is valuable insight, V, right? Because what we do know is that look, if you folks in here, what I just told you, my lessons from I'm sharing with you all the mistakes I made and what I could have done better. And what I could have done better is not be cheap. Because the moment you're not cheap, you pay for more, you get access to more things, and you learn a lot quicker. And same thing with stocks. You pay for stocks that are expensive, they go up way more than stocks that are cheap. Like, come on, like I mean, like compare a penny stock. Yeah, penny stocks could blow up, but then like that's like once in a while, and you need to be strategic about playing that, right? You need to play like penny stocks are great for when all the consumers collectively develop consensus that this stock needs to explode, right? So we go to like serve right here. There's like collective, just about collective consensus that it's trying to make this stock explode to the upside. It did for a little bit right here, right? We're talking about from 2.5, $2.50 all the way up to as high as 20 bucks, right? But then you really need a consumer movement for this chart to really move. But if you look at the top shelf stuff, things like Apple, right? Like, Apple going higher, you already know it's like BlackRock or Fidelity or Franklin Templeton or whoever, right? Like who could massively push this thing up higher? Some sovereign wealth fund on the planet. So this is where high-end intelligence is, in my opinion, right? Thank you, V. Thank you for the comments. Edward says, can you tell us what market behaviors we can expect of a volatility period? For example, large price swings, sharp movements, etc. Yes, 100%. That's actually what I want to focus on today, because today is going to be more unique lesson because we're at a pivotal moment in the marketplace, right? Where volatility is elevating, and it's a moment where I think for the vast majority of us, it requires all of us to pay a little bit more closer attention to our portfolios, right? Because all you see is like a deep sea of red. So how do you navigate in a situation like this? Several cycles from my experience, and I mean I'm in love because like this, like I get to learn again about the volatility cycle. But then now it's a little bit different for me because I'm actually like engaging in the short side a lot more than ever before. So the part that's exciting for me now, and what I've learned, if I could share my experience, is that when you get a volatility event, this is a volatility event, by the way, right? And I'll show you on the S&P 500 like all the levels that kind of show like reveals that this is going to happen. It's not like I'm trying to fine tune, right? I think over the years, maybe in the next 10 years, every Sunday in the next 10 years, let's say, I fine tune to the point where I know exactly when a volatility event occurs, right? If anything, I think in the last 10 years or last 8 years of teaching at this investment club, I fine tuned a lot and I figured out like, general direction. I mean, hey, you can read all my reports and then you kind of see like, it's actually been pretty darn accurate. I'm utilizing my own reports. So I'm trying to share, my views on that. But to answer Edward's question, in terms of like, how to detect volatility or anticipate things, right? One of the key numbers I think everyone in here, and I put in my weekly report as well, is you see the VIX right here, the part that I put in blue right here. That's the number that I think we all need to put on our, I don't know, like whatever your watch list is, right? Like, let's say your weekly watch list, you always have an eye on the S&P 500, the Nasdaq, the Dow Jones, and hopefully you have it on the VIX. But this is the number, this is the critical number right here that I think we all should have, and to remember this number right here. Because when VIX is above this number right here, it's just no longer a good environment for swing trading, right? And if we count, when did this number occur? When did we go over this number? It happened like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So like 2 weeks ago. 2 weeks ago was like the signal to say, hey, momentum trading is not going to really work, right? 2 weeks ago. And then now, right? I mean, we're not at this top part right here, right? Once we hit this part, this number right here, man, we're going to talk about fireworks, right? So, to partially answer Edward's question in terms of like, what can I tell you guys about the behavior of this volatility period is one is eyes on volatility. So eyes on VIX right here. So VIX above that number right there on the blue, that's where I'd be pretty like, hey, like stop swing trading, right? Stop trying to find something and hold it for 3 months. It's not going to work. Why? Because other institutions are not in the habit of buying for 3 months. They're not, these whales are not swimming. These whales are like holding back, right? Then once we hit this red moment right here, then that's where maximum fear, right? And it could get pretty bad. I don't know how high it could get, but it could get pretty bad. And then at that point, we're gonna have to assess the S&P 500. So let's maneuver to like other ways that we could look at this and really gauge like how to embrace volatility and like trade the opportunity, right? Because this is like this event is almost like the equivalent, the anti-economy or anti-pattern of like when Bitcoin blew up in 2020, right? It's like the perfect euphoria environment where everyone's great 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 auntie is literally buying Bitcoin and they don't know why, right? This is the moment. This is like the reverse anti-pattern of like everyone, is developing this bearish sentiment and decides to sell and they don't know why. So it goes back to like cattle and, lightning, thunder striking, right? They hear thunder, they see lightning, they start running in the direction of like, whatever makes sense. And if the direction is down, they start running down. They don't know why, but they're going to run for some period. And I think what we just saw in the last week, I mean, let's say they say lightning happens first and then thunder, right? So 2 weeks ago I saw lightning. Last week we saw thunder. We heard thunder. Sorry, we didn't see thunder, right? So 2 weeks ago we saw lightning. Last week we heard thunder. So what does that mean? What does that mean? Lightning hit 2 weeks ago. Then we saw thunder, or we heard thunder, and then this week, towards the end of the week, we started running. So the running just started, right? So that's another way to kind of anticipate the behaviors of this volatility period, right? It's very human, right? I know there's a lot of machines and even like robot agents on the internet, AI agents on the internet, but still like this is a matter of like economic welfare. This is like what humans operate around, right? This is like the day-to-day, this is life to everyone. This means a lot to everyone. So we're it's going to start running. I think we go lower, right? But I also think there's going to be a lot of imminent bounces, like volatility bounces. And so it's going to make it very tough. What I mean by volatility bounces, did you guys see Nvidia this week? Man, like one day during Wednesday, that thing is up like 16, 17% in one day. Okay, like one day. We're talking about like this is where like if V was like on the planet of like mythology or whatever, and V's looking in the skies or up in the sky, and there's like all these titans, they're like punching each other, right? And he's just like, oh my gosh, like how, and like as they punch each other, gold is dropping, either gold's dropping or like lava, right? So look at this, like on Wednesday, as of July 31st, right? The last day, right? Nvidia was down 20% from the highs, if I recall. And this thing just bounced 16% right there. I know, like a lot of it happens in the pre-market. I know it happens. It's just that's the dumb thing I hate about this. Like this is the other thing, right? The other reason why, like the more I play, the more I realize like how structurally this financial economy is so effed up for the average person. It is screwed up for the average person. Like you can't get exposure to venture capital, start investing in startups because you're not a credit investor. Like, and then like the vast majority of moves happen in the pre-market, right? So it's just like, it's really unfair. Like everything is unfair for the average person. And the only way to really play this is to convert to the other side, become like a business operator or like a professional investor, right? That's the only way you're gonna like survive this economy at this point. I maybe maybe we're more sensitive here in Silicon Valley because everything's more accelerated and more expensive. But I honestly think like yo, like this is the only way. Like you got to learn this. It's wild, right? So again, the vast majority of the move happened in the pre-market, and so sometimes you know what that does? This is what it does right here. Like if the vast majority of the move happened right here, oh, I know it's kind of small. Let me zoom in for you folks. If the vast majority of the move happens in a gap, right? You know what that does to K? Well, like I need to assess the prior day, right? And I need to bet like if I'm gonna do weekly options, right? I need to bet like what I think is gonna happen on Friday. So I have to speculate this gap right here. And is it easy? No, it's hard. But there's interesting things about doing the hard things, right? You will become enlightened by learning to regularly do the hard things. So learn to do the hard things now. So I'm learning to do the hard things by engaging in buying these gaps, or anticipating these gaps, where I don't know it's going to happen, but I have a hunch from just experience, from time in the marketplace and watching the markets, that there's a good chance that there's a probable bounce, right? And then who knew that bounce was like a 15% bounce? I had a ton of calls on that day, right? But the problem was I sold most of them at the open. See, I'm not perfect myself, right? I bought a ton of calls right here. Like we're talking about hundreds of contracts. It opened, and I was just like, I sold on this dip because I was just like, that's a lot, right? And then I took my profits. I tried to reverse and I tried to short up here. Those actually failed. So I gave back some, and I was just amazed. Like by the end of the day, I was just amazed. Like damn, like I should just if I just held like that would have been life changing, right? In just one day. We're talking about like life changing money here. but that's okay. And then the next day, I actually, at the close, I actually did puts, and I wasn't, I was like, oh damn, it wasn't sizable, but I did puts. But the next day, I caught the move down. But again, I also sold too soon. So I'm trying to, I think in my next journey here is I'm trying to really fine tune like the day trading stuff because I realize like if you have high confidence in the day trading stuff, it could get really lucrative, right? And like it's just like really lucrative. We're talking about like what was it? I think it was this week or was it last week? This week I had a position. It was in Tesla or either Nvidia. I was playing those two. But like we're talking about like in 5 minutes you could make a quick 5K if you know what you're doing, right? It's super high risk, but I think if you have the appetite for it, there is that spectrum of playing speculation. But of course, that's going to be TBD. I plan to launch those series. So we go to the FinViz Club platform right now. Again, I got 15 spots left. It's currently free. We go to the calendar, right? You guys know I teach every Sunday right here, but I'm planning to do weekday sessions. In those weekday sessions, I plan to do day trade analysis so that I could better fine tune and perfect the day trades because it's actually really lucrative, right? Stack it on top of like swing trades. So now you basically play all time frames. It's just like how my gosh, why did I forget the hedge fund's name? Uh, what's the Citadel, right? Like Citadel's diversification strategy is just prime, right? Let me see if I can find it. Citadel diversification strategy. It's just like insane, right? So looking forward to the daily sessions, Edward says. I know I really want to get good at it because this is the picture right here. This is like you will be impressed when you see this picture if you understand abstractions. But basically, let me show you this picture right here. Open image, a new tab. This is so impressive right here, right? Look at this. So this is Citadel. Hold on, let me make sure. We're at least like have Citadel in here for illustrative purposes only. Where is it? I know this is Citadel, but anyways, so look at this. So every layer of the onion that you see right here is a strategy, right? So in the middle layer, they make money from high frequency trading, so less than a minute, right? Sub millisecond trading or whatever, and then also market making, right? So like level three access to the marketplace. So they're basically playing dealer. They make money off of being a dealer. Now we can't play this unless we're really close to the ECN networks, right? The electronic communication networks where the trades meet. It's almost like data, but it's not data. It's just the transactional movement. Then after that, there's the arbitrage, volatility arbitrage, and statistical arbitrage, right? That's still not something that us average folks could play. After that, most of us folks are playing in these two right here, this darker green and blue. So it's more like active management, right? So in other words, basically, you look at the time frame right here. So look, sub millisecond right here is high frequency trading. This is sub millisecond or sub second. High turnover right here, right? 1 to 3 days. Actually, yeah. So this part right here is day trading. So I want to expand on this layer. So we start going in there. We look at 5 minute charts, 1 minute charts, 3 minute charts, 15 minute charts. So I went, in weird directions, but 1 hour charts and just analyze and see like what ways could we better fine tune and detect really strong day trading setups so that we smooth out our income, right? Like imagine this, right? Like we play in a way where like every day we come in, we know we can extract one good trade and make like a minimum 1K a day, 1K a day, 1K a day, right? But again, yeah, it's not that easy because you can also lose 1K a day. But risk management comes in. You have to discipline yourself. You come in there, you make 1K a day, 1K a day, 1K a day. I would love to go in there and just make like 5K a day, 5K a day, 5K a day. That'd be fantastic. And then we take that 5K, right? Then we bring it over to the outer layer right here, which is the medium one, and we bring it to swing trading when VIX is below 15. Ooh, right? VIX below 15, then we start playing the 1 week and above type of trades, right? We can do options on those too. And then from there, let's say we cash roll, we snowball, we make a lot of money. Then we start playing the 1 month and above play right here, right? Those would be things like, all right, now you got that bucket of cash. What are some beaten down assets that we can go play? Because we don't care about whether it goes up or down. We just know that the probability of it going down it becomes less and less and less. Unlike Intel actually wins, it's probably going to go lower. But we look at something like a PayPal here, right? This thing's down 80%. Then next thing you know, you're cash rolling into day trades, then you're putting some in the swing trades, and then you're dumping some into the investment bucket, and then boom, you got like a time frame diversified portfolio across the board, right? And then you can play 10-year startup investments as well. So in other words, like I'm playing, like it's learning to play every time frame, and it's just been an amazing journey so far to learn about just the different skill sets that it requires at every time frame, right? So for example, like we're right here, I drew the monthly. This is the monthly chart right here on PayPal, right? But we know that there's a strategy on the monthly, there's a strategy on the weekly. There's a separate strategy on the daily. There's a strategy on the hourly charts. There's a strategy on the 30-minute charts, right? And then all the way down to the 5 minute. We probably won't play 1 minute. We'll probably go as low as 3 minute in those weekly sessions. But in order for me to do that, I first need to get to 100 people in here. So I think we'll get there. Once I get to 100 people, we just got two more coming in. Once I get to 100 people, then from there we'll figure it out. But yeah, it's going to require Patreon access because this is more like high caliber information that I do not want to broadly share, right? So, um, because it took me a lot of time to learn all this stuff. Uh, so we'll get around to it. That's what I'm excited about, guys. Like there's like after watching the markets for a while, like you feel one is like develop your comfort in the marketplace so that you feel so good and comfortable about the marketplace that you could easily transact in and out. And then find a niche strategy that you could run over and over to milk money from the same setups over and over and over. Then after that, you start expanding on other strategies, right? So for example, think about this onion right here. There's many different strategies that one could capitalize on. It's fantastic. Like it's pretty amazing, but the problem is most of us, the average person at the same time, because like 9 out of 10 people or 99 out of like 100 people will be highly engaged in the physical aspects of the economy. Meaning these folks will not be like, like abstraction thinking. In other words, like here, I'll give you an example. We all could imagine the Tower of Dubai, right? What's the difference? What's the difference between this right here? Let's say like 99% of people are in this right here, right? Let's just pull up the Dubai Tower, right? 99% of people are wowed and impressed by things that they could see with their eyes, right? But in order for you to be able to, thrive in this trading world, I feel, and even investing in general, you have to think like a billionaire, right? And to think like a billionaire because folks who need physical visibility is probably like, you're like, less than 100K net worth or, working in like a very laborious job, right? You need to see that physical thing. But and then up until like maybe the net worth of like 1 to 5 million, you still need to see it physically. So if your net worth is like 1 to 5 million, then you still are thinking like physical real estate, right? And then when your net worth is maybe like 5 to 10 million, that's like the transitional point, right? When your net worth is 5 to 10 million, you start thinking more abstractions. Like, wait, hold on, like this real estate is just a contract at the end of the day. It's no different. It's like the government issue me a contract saying a legal document saying that I have the rights to, the title to this property, which is the same thing as the stock equity contract that the government's back as well. So in the net worth range of 5 to 10 million, you start to think more abstract, right? And then in the range of like 50 million above, or 10 to 50 million, 10 to 20 million, you're starting to think abstract, right? Intangible, right? And you see it, but you're probably operating something like, a physical business and you're making cash flow, and maybe a digital business. If you're operating a digital business, you really see it. But once you start to realize like the only way to go from like 20 million to 100 million plus, it's like, yeah, you're like, I realistically can't scale this real estate stuff. So then you realize like I could easily dump 100 million to Apple and my net worth could all be in Apple. And then you realize you fully embrace the abstraction economy, right? Or the digital economy or the, like the financial economy. Then you start to really see it. So 99% of the folks on the planet, they have to see something physical like this, right? But for folks like us, let's say in here, we have to look at stuff like this, right? So whatever you learn to see on the screen, we have to learn to really good look at, really become good at seeing the intangibles and things that are not easy to the eye, right? Like we can't see, the world population, right? It's impossible because the eye cannot see. We're at 8 billion, by the way. The eye cannot see the 8.1 billion people on the planet, but analytics via this right here, via a chart, we could see it. But you could see it, but do you have deep understanding of like what is the impact and weight of like 8.1 billion people? You see what I mean? So this journey in here, if you join me, I'm going to help you evolve and see the larger economies that, these billionaires, all they do, or like Jensen Huang, all they do, like where we track and detect them is by their actions of like transactions, right? Because they're moving economics, but we don't see it, right? Like you don't see like this is why I hate like things like CNBC and stuff like that. Like what I show you guys in here is economically more impactful, in my honest opinion, because we go all the way down, right? I'm showing you that this guy right here, Jensen Huang, he's been selling since like June over here. He's been selling his shares, right? Look at this. So Jensen Huang, he's still selling. August 2nd, proposed sale. So he's still trying to get out, right? And he's selling a large chunk. He's moving like 500 million or whatever. So what does that mean for the stock? He's been selling since June, right? He kickstarted the selling right here, right? Nvidia was trying to go higher, but he started selling. So the other smart institutions, because the vast majority of players in here are institutions, right? Because they tend to perform and they come around. They know that, look, if you make a lot of money in the stock market, you come back to the stock market because you can't really deploy that amount of capital easily in physical reality. How much time, like if you're a fund manager managing $1 billion, you cannot deploy like $1 billion into real estate overnight. You could deploy much quicker in the stock market and meet your performance targets, right? So there's a lot of money flowing in this, but I think just the average person doesn't understand because they don't like to think abstractions or intangibly. They need to see the physical things. But the reality is that we all need to learn to see, you know, this back end or this the size of this is massive. And I realized that for a long time that it's been a very lonely journey for me because not like I said, 99 out of 100 people around you, they don't understand this, they don't see this, right? They can't think abstractively about it. So they're always going to go back to the physical economy. Like they associate like, oh, I need more money, I gotta go do laborious things, I gotta go do DoorDash or Uber, I gotta go do something physical, right? But if you're more evolved and understand the technology of our times, like you want to make more money, dude, you got like freedom infrastructure called the stock market. You got AI, like LLMs walking on planet Earth in the last 2 years. Like you could substantially increase your productivity. But people are like, that's cool that LLMs and freedom infrastructure like the stock market exists, but I'm gonna go and start a milk tea business. Sorry, I'm making fun of my cousin now. I'm so mean right now, but of course he's not gonna listen to this, right? Because he's more focused on the physical economy. But maybe you never know. He might be around the corner listening to this and be like, "Hey, you you bastard." But yeah, like that's what I'm saying, right? Like if I could just change your thinking right there, well, the last 48 minutes that you had with me is already worth it in a lifetime. I guarantee you that, in my honest opinion, right? Like, because now you start to see the possibility of more versus like you're limited to like, I can only do physical things. No, start thinking abstractions. Start thinking about what do these numbers mean? What does move like, what does $500 million look like? Well, what $500 million look like is literally like this right here, right? From 20 minus 22%, at least for one person, right? Jensen Huang. So yeah, this is the best game on the planet because we're talking about the players of scale here, right? Like no one else is going to be able to see this. Sorry guys, I could go on like I could talk pretty passionately about this stuff for a while. Let's look into stocks, right? Let's continue to um, look at the S&P 500 and then see where things go next week, right? Because these are gigantic moves that again it's just mind blowing. So this is what we have with the S&P 500 right here. Well, actually, you guys let me know. You guys want me to go into stocks or really just cover like the important pivotal things, right? Really understand the behavior of volatility because this is like these events only happen like maybe like every 3 months, 3 to 6 months. We'll get like a nice volatility event. So this is one of those events right here. Last 3 months were incredible, but now we're going in through a slower period. So the way I look at it is really look at these levels right here, right? I know I'm going to put on my annotation stuff. It's going to get a little messy, But really look at the levels, right? The 50 MA really fought. They were really fighting the 50 MA right here. It's not perfect, and you can't expect perfect. That's just not how it is in this game. With every entry as well, it's never going to be perfect. That's also one of the things that set me back for a long time in the beginning, which was like I was just like, no, I need it at that price, right? But you gotta destroy that emotion, that ego is it's not perfect. You're never gonna get it at the price, and accept that. The moment you accept that, you move forward, right? This is a game of like it's lonely, it's intangible, you can't see it, and you it's all personal development. You gotta manage your psychology and all that. It's hard. So it's not gonna be perfect, but you see it came down right below, right? That signals a sell, but then it came back up because people try to buy and think that it's a bounce at the 50 MA. So we know that, look at this massive amount of volume right here, right? It's mostly red volume, but there was a true attempt to like really hold up this price. But then this week it failed. So you see where I got the eminent bounce from? So 1, 2, 3, 4, 5. If we go back the 5 days, right, it looks something like that right there. I called out eminent bounce because I do think it could bounce at the 50 MA. It's just the market psychology and what the levels that everyone's looking at, every institution's looking at. So we definitely got that bounce and that effort, and that provided a lot of trading opportunities right here in just like the last 2 weeks. Now we made a clear positional move down below the 50 MA, and look where we found support. We literally found it on the 100-day moving average, right? These levels don't. I'm not lying about these levels, guys. Like this is what institutions actually look at because it actually works. It almost it perfectly bounced right there. So if we're talking about day trades and stuff like that, like look at this, it bounced from what? It went all the way down, very quick selling, all the way down to 529. And if you knew that 529 was a 100 MA line, it went from 529 to as high as 537. So if you know with high probability that it's going to go in that direction, now you won't have the confidence in the beginning. That's why we have to train up on it, right? But if you know that that last day 529 was the bottom, oh whoa, we could zoom in here into the 5 minutes real quick, and we just take a look, right? So right here, 529. Like we zoom into the 5 minute, you see massive amount of players like trying, well not massive, but a good chunk right here developed right here, right? And it rallied. Now this, I know it doesn't look like a lot, but if you bet bigger, it becomes like really good money. So yeah, so like from 229, it went to two five. I'm sorry, 529 to 533, right? Again, this is more day trading, so I'll hold back from talking about it here because I think, on the weekly pace it's more relevant towards swing trading, but we are moving into a tougher environment. So anyways, those are some of the levels that I think we should be looking at, right? Sorry. Uh, there we go. Those are the levels, right? 50 MA, you see in real time right here, and 100 MA. Again, like you might not believe it in your mind, but then that probably reveals to me that you haven't built up your individual database in your mind yet. So therefore, you might have to go and vet. It's timely. It'll cost time, but you'll vet it out yourself and see that these levels actually do work. So you got to invest into your mental database as well. Let's go over to QQQ, right? I mean, we're seeing across the board like Asian markets selling off pretty quickly as well. Sometimes it just moves too quickly, right? So look, we got more confirmation here. More confirmation here. Maybe I could start cleaning this up as well. More confirmation that this is selling down, right? Let me see. Oh man, I can't get that. There we go. So more confirmation. What do we see? So it was in a channel, right? And then that breakup channel right there, that's the first risk management point right there. That's like, hey, red flag, or initial red flag, sell point right there, right? Started going down, 50 MA, right? I know this one sucks because it gapped, and then that day it just sold right below 50 MA. What did it do after? Came all the way down to the 100 MA very quickly. That was fast selling. I took note of that. And that's where I said eminent bounce, right? And where we bounce from the 100 MA to the 50 MA. Eminent bounce right there. And then what do we do now? Back down below the 100 MA. So possible scenario moving into next week is this is the hard part, right? Because you could kind of preempt it tonight by looking at futures, but it could definitely bounce here because this is pretty oversold. I think it'll bounce more likely, but another scenario to anticipate is that it could actually go down further and then bounce. But I think we're gonna get some nice ranges on this, right? It could go something like this, and I mean, it'd be nice. Like every day, there's an opportunity. But how do you capitalize on those opportunities as things are moving so quickly right now? right? At the same time, this might not be the best introduction into getting into like, literally volatility trading over here, right? Because the environment is just not, it's just not a typical normal environment that we see most of the time. So it's going to be hard for a lot of folks. Yes, Akashay, you can't see the screen. The instructions are on the screen. For the folks on the live stream, it's just like the first 20 minutes, and then first 20 minutes is free, and then the pop-up, the advertisement pop-up happens. The only way you could watch my investment club is through the Patreon membership at this point. That's just the way moving forward. There's just way too much value. I know with confidence there's too much value being provided here. So I kindly request everyone to be on the Patreon moving forward. And then whatever price you get in today, it'll be grandfathered in. So if there is a price increase, which again, eventually, right, I'll move with the economy. So QQQ right here, this is where we're at. I mean, it's hard to say, right? But if we measure, always measure from the top to bottom, right? Down 12% right there. About, well, there you go. Is that top to bottom? Kind of sloppy right there. There you go. About 11.75%, right? So people are going to try and bounce trade this, right? Because what again, these institutions don't know how low will go, but there is fear and there's demand for insurance contracts around protected puts. So let's measure this one. We know Nasdaq is down 11%, right? This one's down 6%. So if we're talking about correction, right, from highs to the 200-day moving average is only 12%. So we're talking about a 20% correction. Darn, my screen's not even big enough over here. If we talk about 20, there we go. We talk about 20% correction, right? At that stage right there, you know what I'm thinking, guys? If we get to that point, that's like, again, you should be happy this is happening. Like, if we go down there and we track it every week, right? I'm bullish on the markets overall in the long run, but if we could identify these points of where it pivots, it could get very lucrative, as you can see right here. Right? We're talking about like, maybe Facebook down like 10, 15% or 20%. That gets very attractive. I think people will attempt to buy. So right now with VIX over 15, be mindful it's a high volatility environment. Try to take profits a lot sooner. I feel these are some things that I'm practicing mentally, telling myself like, hey, it's not the right environment right now. Mold to the current environment and play it as you expect the direction. And as I'm expecting the direction down, it won't be a straightaway down. It'll be a lot of bumpy, choppy, rip your face off type of rallies, like 15% plus on Nvidia in one day, right? So hopefully, maybe the markets tend to forget those mantras, right? During bear markets, I think the Wall Street mantra is that you have a tendency to have these rip your face off bear market rallies, right? So anticipate that. IWM, I'm skipping Dow Jones real quick, but this one was like a fantastic case study right here, right? Because this thing was actually really, trying to move higher here. It was tightening up right there at the 220s, and this thing tried to go higher. But instead, what you got is this thing massively sold down. So at that point, it becomes a short trade, right? Historically, I would just cut and do nothing. But then now it's like, hey, that's a short trade. So it's like chase after it if you have the guts to chase after it. But if you did, even on that first day, right? Second day is super lucrative, right? It went down from, even if you got that day, right? It went down to the 20 MA, and again, scary because it could bounce right there, right? But then this thing instead went to the 50 MA. So it went from 215 to 208. Imagine like the options on those. Like just damn. That's money right there. Again, we'll start reviewing those on the weekdays once we get past 100 people. It's what targets that I'm setting for myself, but we'll see. We're close by. Uh, Sorry, let me just refresh that. I'd be curious to know. There we go. We got like 88 people, so 12 more people. 12 more people, and then I'll determine what days make sense, and I'll put it on the calendar there. Okay, so let's look at Dow Jones. I mean, it's the same thing, but I do want to show you international markets. I think that's important as well. So going over here. So nice double top. Again, let the machine draw it for you. The machine also drew this top resistance line right there. So we know that those are several points of resistance. Where's the 20 MA? Let's pull out the drawing. That's the 20 MA right there, right? 20 MA right there. We had a double top right there. One could have attempted short, sure. Short off the below 20 MA, and then long off the 50 MA bounce. Look at that. Look at where it bounced. I'm showing you guys in real time here. The more we practice this, the more you're developing your individual database, your mental database, right? The thing is like if you're feeling frustrated that you're not able to execute, trust me. The problem is we haven't developed our mental database yet. So develop our mental database. You do that by putting in the hours. This is literally where I'm building my confidence, right? Like I start off like everyone starts off as an amateur, but like we just keep on putting in the hours. So I'm showing you and validating you and validating in real time, showing you proof that these levels work and that they will bounce and it provides near-term trading opportunities, right? Again, not investment advice here. Again, this is all for educational purposes only. I'm an educator, more of an educator than anything, and trying my best to learn along the way because this is a fantastic topic that most people on the planet won't really dive into because of the abstractions. But again, break up the 20 MA, nice bounce right there, right? Big nice bounce right there. But again, we have to actually zoom in to see if it was a gap or not. So we go in, right? Go into a 5 minute chart. So opening, right? Opening hour right here. Breakdown goes down first. This is the first hour of the day. Typically, first hour. We typically reverse right here, right? You got a nice reversal, but it came back down. So yeah, you can really make all your money in the first hour. First 2 hours, I would say. First 2 hours is pretty lucrative, but it moves fast for some folks, and you gotta be like making fast decisions. Now, in order to be able to make fast decisions, the problem is really your personal mental database. You have to build up your mental database of scenarios so that you get really comfortable. Trust me, you get really comfortable when you put in the time and you develop that mental database. Again, right now, if you feel frustrated, it's just the answer is probably put more hours into it. Let's go over to the international markets. I show you what's going on the other side because I mean it's scary for folks out there. Look at this. This is wild, right? Because Nikkei, Japanese markets, it was rallying to like highs, and then like it sold off very quickly right here, right? Sometimes you have to zoom in to capture like the actual fear, right? But there's a good chance that this might bounce because these are pretty big candles down, right? These are very emotional selling candles right there. Again, this is also where some of the advanced techniques is to recognize like the candle pattern analysis, right? Like the candlesticks itself. So massive sell-off. Japanese markets might be oversold. There's a high probability. Again, if you want to play it later tonight, it's high probability we bounce up right here and then go something like that, right? That could very much happen. All right, so maybe at 3 p.m. later today, we look at futures, see if we open with a gap up on the Japanese markets. But I think overall, with looking into this weekend, right? I think this weekend the markets are digesting and they're looking around, right? Like I'm just trying to imagine myself, like let's say an average individual, like they're just browsing on social media or the internet or news, and then the news stream is communicating to them and capitalizing on their attention by saying, "Hey, look, like Nvidia, it's currently down 20. Well, we put it right here. It's currently down 23%. So again, think about the average person, right? Like the slow reaction they have to the markets. Like they don't have any calibration or a sense of like is this market oversold or overbought? Is it up or down? They don't have a sense of that. All they have is like cheap news, like cheap information, cheap food quality. They just have cheap information from headlines saying Nvidia down 23%, and then in their mind it's like, wow, 20%, 1/5, that's a lot. And then come Monday, they just, I think this is a good buy. This is me. This is me showing you folks what it means to be cheap right here. It's down 20%. I think it's a good buy. I'm being cheap. I'm going there and buy it, right? But then what little do they know, they're being exposed to massive volatility as VIX is over 20 right now. So again, you start to see it. You guys hang out with me long enough, we start to realize like, us folks don't really have many other folks to talk to. Because like you start hearing your other investor friends, like you could talk investing, but they get so like dramatic about the politics and the emotions and the stuff like that. No one's paying actual attention to the markets right here. We're actually looking at the markets right here, right? And we're actually looking at the levels of the markets where the markets are making decisions at different price levels. Very important, right? How like I want to know, I want to gauge like how are the markets reacting to this, possible demand level at the 100 MA right here, right? And then this supply level right here, right? Because prior someone was selling hard right here, right? So I need to watch the markets, and I don't need to go to wallstreetjournal.com or CNBC or Barron's or whatever. to have some person be the broker of my information. I'd be like, hey, get out of my way. Let me just read the charts, and then the charts will tell me what's going on. You see what I mean? I'm showing you folks to go to the source of information. This is the source right here, but it is incredibly hard in the beginning to read price. Like I put so many hours into reading price. I'm willing to put in those hours because I think those hours are worth spending. V says yes, you hit one of the key of most novices is letting our emotions or the emotions of others affect our decisions. Yeah, that's why I go back to the cattle example, right? Lightning hits, you see lightning, you hear thunder, then the cattle starts running, right? The cattle is just starting to run right now, but I don't know what direction yet. But so far, I mean, I don't have full conviction on either direction because volatility is high. It could go either direction, right? But the cattle's going to go with it because again, like I saw people's responses on the internet when Nvidia was up 15, 17%. Some of them would go I see them so emotional in their, in their like their social media. It's like Nvidia's down, up 15%, like it was down 25%. I told all my friends and family like this is the time to buy, blah blah blah, it's time to get in. The next day is down 7%. They don't recognize that it's a high volatility environment, and we need to like learn how to behave a little bit differently here, right? So what are tools or things that we could look at to protect ourselves in these moments? Again, we all don't have enough time to practice in these sort of environments, right? Because I remember myself like in several cycles ago, like in like maybe like the first year when I started learn all this, when a volatility event hit, one, I didn't know it was a volatility event. I was just like, holy crap, like, this stock's down 20%. Why? It's like a sea of red, right? And then like, I'd be cheap, emotional, right? First of all, I'd be cheap. I'm like, I'm gonna jump into this stock. It's down like 60%. Then it goes down to 80% down, and then I'm like, oh man, and I'm being emotional, reading cheap news on CNBC telling me like it's gonna rally, right, or whatever. I don't know, right? And then it's like, oh, but it's going down lower. I'm being emotional, and then I'm like, I'm not gonna sell it. And then it's like 50% down on my portfolio. I'm like, I'm gonna sell it, right? Because CNBC says it's so negative, right? And then next day it freaking rallies like 20% or whatever, and then you're just like ripping your hair out. That is literally the average person. And then you know what happens after that? They rip their hair off. They tell all their friends and family that the stock market's a scam. It's gambling. Blah blah blah. But dude, like, do your damn homework and look at it. The freaking stock market is it's the economic infrastructure of society. It's so massive. Like folks just don't understand. And so again, I'm sharing with you what how I started, how it was in the beginning versus how it is now. You see things a little bit differently, and your emotions a lot more tamed, right? And you recognize who are the emotional players. So massive amount of lessons right here, right? Like this is like things that I've learned in just man all these years of just different cycles. This is just another one of those cycles, right? And I know we'll get through it because we got through the global pandemic, right? The only way this game would have ended is if the global pandemic actually wiped all of us out. If it actually wiped all of us out, equity assets, it means nothing, right? If we all got wiped out like from the global pandemic, the reality is I wouldn't be lecturing. I'd probably be like, you know, finding like, the reality is I'd probably like be in ripped up clothes, hair unshaven. I smell like poop, right? And I'm breaking into a grocery store, scavenging, see what cans are available, and trying to see that would have been the reality. But we didn't collapse, right? So society pulled through, right? It would have been like The Walking Dead, 4 years ago or 4 years later. But it's not The Walking Dead 4 years later, right? What do we have instead? Instead of The Walking Dead society, what we actually have now is we actually got higher prices, right? We got like almost $6 gas, or is it $6 already? I haven't gone out. I need to go check prices. But yeah, like we got $6 gas, we got $10 coffee, we got, we got just prices increasing left and right. And then you're just wondering like, wow, this banana society, a banana economy. And that's probably going to be the reality moving forward. Because again, I didn't see any changes in the last 10 years of analyzing over here. What I did see in the last 10 years is I saw a lot of liars. Those liars are like, again, CNBC just trying to make money off of people's attention. So, hey, it's up to folks to decide because I know for a fact that, let's say, if there are only so few pockets of signal high good information out there on the internet. and not enough like, you know, discretionary thinkers who think on their own out there. So I know for a fact that the vast majority of people are just rotating between like crappy information, and they're never going to find it. But again, unless you'll find it by putting in the hours. That's the only way to find it. But most people just hop like from, places to places trying to figure out. They're always surface level. But the key thing is to go diagonal, right? You go broad and you go deep. But in order to do that, you got to put in the hours. So I'm a big believer of the hours, right? Let's go over to the other markets. We were looking at the Japanese markets. Let's show you the European markets. European markets as well, right? This thing is just it's just looking nasty right here, right? These are short signals right here. Um, so yeah, look at that, below the 200-day moving average, right? Definitely going into next week. Officially, I mean, red light kind of occurred like Thursday or even sooner. But I mean, last week I called yellow light imminent bounce. This week, what do we see? We saw a little bit decline in the beginning, and then we saw a major rally on Wednesday with Nvidia up over 15%. That was the imminent bounce. And then Thursday, Friday, we continue to sell down. So what's likely to happen next week? Now that I'm looking at charts right here across the board, Asian markets with the Japanese markets, European markets with the Stocks 50 right here, it definitely looks like an oversold situation. So what it is this week is probably going to be like a red light imminent bounce. So I anticipate volatility is high, right? And I still think we're going to go lower. So I think there will be an imminent bounce because people have that cheap person, mentality at scale, right? It's just that's human nature. Oh, everything's cheap. I gotta go buy. So that's going to create massive volatility while the big players are trying to transition out because directionally speaking, based off of institutional signals, the direction is down, right? I mean, it's not like fully down yet, but we're just climbing down, and you never know, it could get a lot worse. The only way to really know where this is all going, I mean, it's to zoom out and not care about it really. But if you're trying to like trade in between and make some, extra money, yeah, it's helpful to know direction, right? And at least to the daily chart right here, right? Because the other hard part is that if you go down to like the hourly 5 minute chart, you might get burned out. You get burned out because it's just like too much to learn, too many signals to know, right? It's not going to be easy, but that's the name of the game. Um, so Stocks 50 right here, clearly sold down, right? We could go back to it. It was choppy. I admit it was choppy, right? Up and down the 50-day moving average, but finally it came below, right? Then you have like a break of price at 4,800, confirmation right there, more bearishness. So now it started to go down. It could bounce and retest either the 200-day moving average or the 4,800 area right here, but then I'm expecting the prices to go down. So that's what I'm seeing right there. So across the board, it still looks pretty negative. What we could do later tonight is again rely on futures to get an idea of like what the Asian markets think. Uh, I'm guessing it might be a bounce. You might see some green, and we might gap up at the open tomorrow, and then we might sell off the rest of the day. Right? That might be a scenario. But again, for you to develop all these different scenarios in your mind, you actually have to you have to spend the hours of watching paint dry every day. And you folks know yourself best, right? It's like how many hours do you put into this? That's the honest question that we all have to ask ourselves. Okay, we'll go over. You guys want to look at crypto? I can show you crypto as well because it's a sea of red left and right, right? There again, you can't hide from global volatility here because when these events happen, it happens at a global level. So this is what it looks like right here, right? Massive whale right here. But now, as you can see, it broke the 200-day moving average. It's not perfect, but it works. See that? Right? It came down and it was hugging the 200-day moving average. That's actually bullish. And then it actually did try to go back up, right? Re-entered into the 200-day moving average, but then shortly now it failed, and we know sentiment is negative across the board, right? And now it's kind of like just trying to go lower. So be careful. This is what I'm seeing in that segment. Uh, did I miss any comments here? I know comments started rolling in, but let me see. Yeah, so V also said Boeing didn't play out. Yep. I mean, it did play out momentarily, but the thesis didn't play out. So that's a sign to get out, right? So this was earnings right here. It didn't gap up the way I wanted. So again, remember there's ways to stop out. Like your risk level stop out, which is a price stop out, chart stop out, time stop out, or expectation stop out. the expectation didn't hit, so it didn't hit, now it went down. Now you have actually a short signal. So again, a lot of times like when this happens to me, I would just cut it and then go to something else. But then like now in like my later years, I would say, of like trying to figure out this game, now it's like, wait, why am I getting out and avoiding it when I could just go short? So this actually became a short trade right here, right? It was a tricky long and then a short trade. Now this is interesting because like didn't we get some rockets fired in the Middle East this weekend, right? I look over here, I see Lockheed Martin, like buyers going crazy over here, right? And then RTX, Raytheon previously. These are major aerospace and defense companies. They're rallying like crazy. So again, I'm hearing the news, but I'm not seeing it reflect in certain stocks, maybe because Boeing is actually that bearish. So again, when I'm wrong, instead of just cutting, now I think about, well, is there a short? Right? Like don't just say, hey, oh, I was wrong, I'm cutting here. But wait, hey, wait, hold on. Can there be a short? So yes, like like CrowdStrike was perfect. CrowdStrike, if anything, it could have been an amazing short, but I failed to pull the trigger. I know my failures, right? So like up until this point right here, right? You can see like this volume right here, massive accumulation at 3,800, and I was ready to buy that too. I was watching that. I was like, oh yeah, this could be a big runner right here, right? But then this happened. I'm like, wait, nope, don't play it. Do not play it. Do not play it, right? And then let's see if it comes back. Nope. Oh, 50-day moving average, invalidated. Nope, do not play that at all. What I should have said, that's a short, right? I should have said that's a short right there, but I didn't take it. And then I should have said that's also a short, right? And then the news hit, oh yeah, that's definitely a short. Oh man, and then oh dang, all the way down. So that would have been massive right there, right? In just like 15 days, you would have retired if you bet like if you had the guts to bet that way. So yeah, I'm learning now, right? Is that like the best moves could happen. I think the best lesson is like probably Doge, right? Uh, like one of the most powerful lessons in just trading and market price action is probably Doge. We go to Doge real quick. It not Doge right now, but Doge previously. Oh, I put coin market, my bad. Coinmarketcap.com. This is the biggest lesson right here, and let me tell you why. So we go in here and we click on this right here, because now again I'm in the phase of like I get it, I get how things work. I'm trying to fine tune, right? I have a baseline, of like a baseline model in my mind. Because again, one is you in data science, right? One is like you need the training data set, and then after that you start to build the mental models and you experiment with those models, and then over time you fine tune, right? That's the process of machine learning basically. So one is like if you feel intimidated in the markets, then one is you first need to build your training data set in your mental database. Build up your database. Then when your database is flooded with data in your mental database, then you start thinking about models, right? Like, frameworks around that data. And then like you start to apply different theses on the marketplace. And then over the years you apply more models and collect more data. It becomes a nice feedback loop. Then you build up your experience and your lessons. It's literally like that's called learning, but then that's also called machine learning, right? The process of it. Um, so yeah, it's just like you learn over the years. But the example I want to show you right here is Doge, right? Because we need to look at the date right here. We're doing observations. So this is the training data right here. And I remember that day. I remember this day when everyone, every millennial was talking about Doge. It first popped up right here, right? So about March. So March was like the first elevated point. March, April, and then the peak was right here, the 5th, May. So what does that tell me? It tells me that you can make retirement money in just 2 months, within 2 months. So if I'm trying to fine tune in my mind, right, based off of like all the different experiences that I've been through in the stock market, because I'm collecting that mental data in my mental database. Again, this is the last mile of intelligence that no LLM technology could do it for you, right? If anything, LLMs, LLM technologies like ChatGPT make life easier for you, but it'll make you rusty. It'll make you as a person rusty. You have to like actually embrace the technology to actually get to that, that last mile of intelligence, which is chart interpretation right here, right? Insight interpretation, and then execution on that insight. Gosh, like we're performing machine learning every week. We just don't realize it. So based off this fine tune or this this case study example right here, right? I understand that wealth, like lifetime wealth, could be made in 2 months, right? So now moving forward into like the next euphoria event or the next bear market event, right? I have some other data over here. If I go to the sentiment, I also have a quantitative 30-year back test of the S&P 500 having declining years of 2 months as well. So what it's telling me is that high volatility events, whether it's high volatility to the upside or downside, and again, this is a discretionary analysis. It's not backed by quantitative research just yet. It's more backed by just my gut instinct and my gut instinct based off of my mental database I built up over the years. Sorry, I had to give you that disclosure first. So what I realized is that, okay, then every high volatility event lasts about 2 months. I think we could actually model that, and I could actually get a better confirmation of like that gut instinct. But it's okay. That's good enough for me to trade it. So if I know it's like approximately 2 months, right? Then this decline might be 2 months. So that's why I say in the next 60 days, I'm just going to be more active trader and just wait for a spot, right? A spot of like potential support. Maybe that support could be right here at the prior breakout at 12%. This we could bounce right here actually, right? On this. But I'm thinking, yeah, two months is all you need to make all your money. You look at some of the hedge fund managers in their career of like, I don't know, 30 years, like George Soros, like realistically, he made all his money in probably 1 year. Like Warren Buffett, right? Warren Buffett made all his wealth like after 70 or something like that. You see what I mean? Like those are some powerful, data points right there to consider. Warren Buffett's wealth came, all after. Again, I'm just guessing over here. We should pull up some LLM technology. To that point, 99% of Buffett's net worth was accumulated after he was 65 years old. You see what I mean? Like that's why I'm saying like if you feel like this game is so hard, I'm frustrated, it's not working, I'm not getting anywhere, just remember, like all your wealth could be made in just 60 days. I think it's Patrick. I think Patrick, you're on the call. Is that the? Gosh, I forgot the last name, but if it's the Patrick that I know, the engineer Patrick, who was into crypto NFTs, is that the right Patrick? I think it is, right? If you could put a comment in here, just say yes or no. Wait, let me see if it's yes or no. Yeah, okay, hey. He said, yeah, hey. Let me ask you back, right? Back when we were talking about crypto and you're up like 500K on your position or whichever, right? That moment lasted about 60 days. Would you from a discretionary standpoint, would you agree with that? Yes or no? I'd be curious to know. Or I remember you showing your portfolio was up like 500K or whichever on like an NFT, and that moment lasted about 60 days, less than 60 days, right? We need to hold these euphoria high VIX moments. Oh, you don't have to say yes or no, but I just remember something like that, right? In my mental database over here. But basically, um, if we know that the optimal amount is about that range, again, this is getting to trading tactics over here. Next time we are part of an event, I mean, that's like right now, markets are declining like crazy, or a relatively good amount, compared to previously in the last couple months. Yeah, I think 60 days is a sweet spot, 2 months. Patrick says, the peak was shorter than that, but it did hang into high values around 2 months. See, there. I think there's maybe there's like a Fibonacci analysis here that we could do, or some sort of like human fractal pattern, right? It's just like the way us humans are emotion, like from a crowd perspective. Let's say going back to that thunder lightning example, right? When lightning strikes and then thunder sounds hit, or you hear the thunder, how long? The question that I'm trying to come to conclusion in my mind is, how long do the cattles run for? And I think it's about 60 days, right? I think 60 days is the magical number. Now, you might be asking, like, hey, why are you putting so much emphasis on this? This is super important because the next time you're up 500K on an NFT, you need to count how many days has it been. All right? You thank me later. You thank me later because I'm thinking about this too. I'm thinking about the same thing right here because I'm thinking the markets, I think that's the magical number right there. Within 60 days, you can make all your money. And then just GTFO, right? Get the F out, and then just wait. Just just wait for blood on the streets. I know it sounds crazy, but that's massive alpha right there, right? Coming from like 10 years of like analysis over here, I think it's 60 days. Ugh, man, that pumps me up, right? Like just the statistics that we saw, right? Warren Buffett made the majority of his wealth after 65. So we know that the vast majority of wealth is basically made in events like right now, right? Where markets have it's high volatility, really. It's the moments where wealth is exchanged. So Nancy says, where are we now in the 60 days? Oh, we just started. I think we're just like fit 2 weeks in. We're only 2 weeks in. We're only 15 days in, 14 days in, right? We're here. So 2 weeks ago, I remember, right? And we know the last pullback period was 1 month. So this one's more severe of a pullback than this pullback, right? So this pullback has to be 2 months. That's what I'm saying. You might as well just, unsubscribe from my Patreon for the next 60 days, come back and subscribe on October, and then say, hey, Kay, what are you buying? So does that mean we need a GTFO? No, Nancy, I'm not gonna look. Look, this is more, as you know, over the years, this investment club is much, much more about. We emphasize on true learning here. Okay, I can't advise you on getting out or getting in. I could give you my opinion. Right, it's always going to be opinion. But if you ask my opinion, yeah, I think I think I'm looking at downside in the next 30, 60 days here. But there will be massive bounces in between. So let's say as your captain of this ship over here or this airplane, right? I'm telling you that in the next 60 days we're going to be flying into some volatility over here, and so you have to adjust your seatbelts, right? If you need to use the restroom, right? Go use the restroom, right? Go now before all the toilet paper's gone, whichever it is. Evan says bear markets have huge 20% bounces. Yeah, 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 right? So I, the lesson today, I hope it's super valuable to you folks because I'm pointing out that the environment has changed. And the question is, are you aware that the environment has changed? And now that you're aware that the environment has changed, are you, based off your mental database, are you taking the right, positions that you think you can with the confidence that you developed, or if not, right? Again, you have to see these cycles and live through these cycles to really understand that. Like, we're not perfect in a sense where, like, if we're born and we already had these experience cycles in our mind, we actually have to go through life and learn these experiences, right? So to me, it's been an absolute treasure to like just watch the markets over the like the last 10 years because I just collect. I didn't know any better, right? I was lost like anyone else, I would say, but I just kept on collecting that data set, that experiential data in my mind. And then over time, you develop the confidence and you speak more confidently because the logic is there's no reason why. Look, if you're here for like 3 months with me, after 3 months, you're probably going to associate yourself with smarter people because now you have an idea of what to look for. And so you start looking for those people who also see that. And then now you see who's like skilled and who's like beginner, right? Who like you go out there and you talk to other investors and traders or whatever, and you see which ones are expressing those emotions, and then you realize like, oh, they're pretty junior in their journey, right? So that's how you're fine tuning to the right folks and talking to the right people, finding the right startups, finding the right investors, finding the right career opportunities or whichever. It's putting in the work. Okay, so CrowdStrike here, very powerful lesson, right? And I think we're going to see a lot more of this. What else? What other stocks could we talk about? Now, Snowflake, interesting, right? This is like one of the top publicly traded software companies out there, and prices are going down lower, right? So some folks are like, oh, it's cheap, but here is a exam test from Professor K over here. Okay, now we know, right? This is an exam test, and I mean, it's a fun, imaginary exam test. What do we know about this right here, guys? I'm pulling off the bigger charts right here because this is an interesting situation here, right? Because one is we know it's cheap, and how cheap is it, real quick? We know it's cheap. Now, remember, being cheap is not wise, right? We know it's cheap. Why do we know it's cheap? From the high to the low is down 72%, right? So what do we know? We know that brand new investor will be like, well, looking at Snowflake 365 over here, as smart as I am on my first day on the job over here, I think it's actually a good buy. Right? I'm pretty sure. Now, it's good. I mean, we IPO'd right here. We made a high right there, right? That's a high right there. And we made our low right there, right? What happens when we make a new low? Ooh, right? Now, hold on. Well, on your first day, someone taught you volume profile. So you're like, obviously, it's trading at where that whale is at. We know that there's a whale right there, right? But the problem is we're about to hit a new low right here, right? And that's something that the markets have never seen before, right? So, we create that next candle, then we create that next candle. This could actually go lower, guys, right? And you're thinking like, but wait, it's already down 70% plus, right? It's already minus 70%. How much lower can it go? You'd be surprised. You'd be surprised. So to me, believe it or not, right? 10 years ago, I would have went long this. Now, you ask me, I'm looking at shorting this. I'm looking at this as a short. You see what's changed, right? It's crazy, right? It's crazy that 10 years ago I would go long this, but now I'm looking at it as a short because everything's bleeding out. Like you have a higher, they call it situational awareness of the marketplace, right? I know what's happening in Japan. I know what's happening in Europe. I know what's happening in America. I know what's happening with the VIX. I know what's happening in the industry verticals or the sectors like the semiconductors and the software. I know what insiders are selling, right? I know what the price action is. I know where the whales are, and this whale is failing right here, right? Whatever whale that's interested in buying at this price, it's starting to go against them. And I know that that whale does not like prices going against them. So what happens is if the whale that's hanging out right here fails, right? This whale right here, if it fails, they're going to unload. And as they unload, it's going to add to the decline. So that's a short idea. Sounds crazy, right? Sounds crazy. Sounds tough. And then you're probably like, well, but Kay, like, it's at 120. It's down 70%, right? That's like it's so cheap. And it's already down so much. I can't short it down anymore. That's the same thing of like being cheap, but on the opposite side. It's like being cheap on the short side, right? Because on the short side, it's a different you capitalize on the downside. So this is the same moment of being cheap, but on the other side. Like no, it can't get any cheaper, right? But then the professional or the more experienced folks will say, no, that thing looks like it wants to go lower. So the environment, right? It creates a probable event. It's never guaranteed, guys. It's just a probable event. But I'm just telling you, right? This thing could probably go lower. It's bleeding out right here. It's a broken leg and it's going to be crippled for some time. So it's wild, right? Do you guys have any stocks you're looking to buy? I'd be curious to know who's trying to buy something right now. I'd be curious to know. Trust me, the more you engage, the smarter you get because like you're actually really thinking about it, right? It's just like, if I was a professor teaching about, I don't know, like 2001 financial crisis, no one would care. But if you teach about like, the financial crisis of 2020 and 2020, everybody pay attention. Like the 150 folks that we had literally in this, in the Zoom at that point, or was it GoToMeeting? I'm only thinking of buying puts. Good job, V. I'm thinking the same thing. But I'm thinking both sides. I'll play both sides. I think that's when you really evolve. When you're like, in the beginning, everyone's long, right? When you're new, everyone's thinking like, oh, what should I buy and go long? And then eventually you're like, all right, I'll learn risk management. And after you learn risk management, you're like, hey, it's kind of boring just like being on the long side. Then you start thinking about puts. So yeah, playing both sides has just been an evolution. It's a fantastic evolution. Evan says, me too. I'm sticking to the trend. Yep, exactly. The trend is your friend, right? I'm teaching you guys so that you guys teach me to reinforce my principles so that I don't digress from like the truth, right? This game is like it's really monkey see, monkey do. We see a downtrend. Don't fight it. It's a downtrend. Stick to that. It's a downtrend. If it's an uptrend, okay, right? But then the problem is, look, it's a downtrend, but then all CNBC is like, it's down 70%, it's so cheap. This is where you should buy, 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 buy. It's wild. There's too much noise out there. So again, go through the journey of figuring out who's noise, who's signal, like who's decent to pay attention to, right? Who's a contra indicator? If they're a contra indicator, ask them what they're buying and then go sell it, or ask them what they're selling and then go buy it, right? It's hilarious. valuable to learn how to profit from negativity and increase our versatility. Yeah, yeah. Like I said, like take a piece of like yarn or whatever, right? Take a piece of yarn and put it all here, right? And then stretch it, and then in the end stretch it all out and say that's how much margin or potential there is, right? That's a lot of money. And then you realize like, well, holy crap, like markets go up and down every day, right? Life has to exist. This is the infrastructure that is critical to the global economy. There will always be opportunities. So because you know there will always be opportunities, there should be no more reason to feel FOMO that you're missing out. And when you feel no more FOMO, then you know that okay, it might hurt a little bit to miss a trade, but you don't care because deep down in your mind you know that the markets will always have to move. And when it always has to move, you know someone on the other side is transacting money, then you always know that there's going to be opportunities to print money, right? So in the beginning, practice the best principles that we can, which is like risk management and finding the great trades. It just takes time. It's scary at first because your database in your head is just empty. Our job is to fill up that database because once you have too much data, you start thinking about models. Then when you have too much models that you took to the markets and experiment with and it failed and you found successful models, then you double click and double down on the models that work and you keep playing those models over and over. Meanwhile, you start to elevate more because you keep playing, you collect more data to play even more sophisticated models in the marketplace. But the only way for you to see those more sophisticated models is if you develop your ability to see abstractions, right? And some great ways to develop abstractions is to, well, look at boring charts like this every week with Kay, right? uh, I love it. V says, I love the markets as well because it applies to life. How many people can handle challenges or even walk away stronger from great challenges? Exactly. Right? Like for you folks to like stick with me this long, and even myself, like we know we put in the work here, and we know we're still trying. And it again, that's exactly how this all started, right? It's all started because like I couldn't talk about the stock market with my family because everyone was so physical oriented. But then this game demands, intangible thinking. So you're always going to feel like you don't belong in most circles because, right? Most circles have to see it to believe it. But what I'm teaching you here is to see it with your eyes closed. That's the difference right there. To see without your eyes. And when you see without your eyes, right, we could go in here and we could look at some sophisticated portfolios because now you guys know I pay $1,300 a year for this, and this is the quality stuff that I'm bringing to the investment club, right? So I'm going to be doing a lot more investor analysis, and we're going to go in here and just dissect their portfolios and think about how they think, right? Think about how they are seeing things with their eyes closed, right? We go into Warren Buffett's portfolio right here, and we see like how's he adjusting and stuff like that. But this is the last update right here as of the second. Today's what we the fifth already? Oh yeah, we're the fourth. Okay. So this one updated on the second. So we go Warren Buffett's portfolio and we go into summary. I was gonna wait, hold on. It was current portfolio, but well, we could do it here. Let's see. His biggest position right now, as the most recent update, is Apple right there, right? 41% almost. And then Bank of America and then American Express, right? Very, old school investor, but there's a lot to learn from his list right here. There's so much to learn because if anything, he mastered in his, 50 years of practice, right? He discovered something. He discovered the ability to scale. Why am I having trouble clicking around here? Oh, that's right, because it's down here. They tricked me. We go to the weighting right here, right? He's mastered something which is scale. And look at his one position in Apple right there is worth. Hold on, that's 100. Can't be 135 million. That sounds so little. Oh wow. Okay, yeah, I was right. Yeah, that's 135. He's got 135 billion dollars in Apple, right? Talk about walking, talking, economic node right there. That's really potent, right? And again, only you folks here inside the Patreon or inside the Zoom could see this right here, right? Folks on the live stream, yeah, it's going everywhere, but there's actually like they can't see it. They can't see that. They only see like an advertisement. So I'm making it exclusive to just the Patreon members, right? The people who support me, and you guys see the cost that goes into this. And like I said, the School.com platform, right? That once we get to 100, we'll lock it up and we'll do more events. I'm excited to move forward and just learn so much more, right? I'm selling myself over here to want to put in the hours, and I have been actually. I've been just spending days like it's interesting, right? Even after like 10 plus years, like I'm still like trying to like get better, and I'm trying to learn new things, and I'm diving into like lower time frames just to learn like what are these traders learning. So it's just it's nonstop learning. There's so much to learn, but it's just the problem is you might get, paralysis from all the analysis, right? So it's just a matter of like, can someone guide you to learn something and find a spot? And at this point, I feel pretty confident in like if I understand what you're looking for. Like if you ask me like, hey Kay, what do you think about this stock? And you're welcome to ask in the school platform, by the way. Feel free to ask. I'll answer. And what I'll ask back is like, hey, if you're looking at the stock, like what's your risk tolerance? What's your parameter? How are you looking at the technicals? Right? The more we engage in those conversations, that's how you're going to get better because you start look, you know that I have this 10-year database in my mind and you have to query from it. You have to extract from it. In order to extract from it, you have to engage with me and ask me the question, and then I'll recall from my memory and answer it honestly. Right? It's almost like an LLM over here. It's a person. It's a it's the KLM. Just kidding. But trust me, like you have to extract the database from my mental database because it's humanly impossible for you to, you know, have some sort of like connector or integration in my brain and it goes into your brain. We just aren't there yet, right? Neuralink isn't there yet with Elon Musk. So that's why I realize like, yeah, engaging is actually really powerful because it's an activity where if you had a chance to talk to Warren Buffett, you could query from Warren Buffett, which is one of the best mental databases on the planet, right? Man, that sounds exciting. But then, like, the thing is, like, if you ask him, like, hey, what do you like to eat? It's like a waste of a query right there, right? Like, you could have asked him something way cooler. And like Warren Buffett, let's rephrase the question. In your 50 years plus of investing experience, right? What is the most valuable lesson that you could share? How did you proceed? Like, be more specific. How did you, look at stock charts in the 50 plus years or fundamentals? What are the fundamental metrics that you always look for? Ask something more specific. That shows that you're really trying to search, right? Which is what these LLMs are essentially doing. Um, Man, I'm too excited. We can let's see. V says we can call ourselves a SWAT team of capitalizing on what the whale give us. Uh, been watching SWAT on Netflix. It's pretty good. I should check that out. I've been watching I finished the Three Body Problem. It's so good on Netflix. Like if you're into like the geeky science stuff, the Three Body Problem on Netflix, man, I for me, it's like a 10 out of 10 for me. It was such a great show. I recommend it. Okay, let's continue with stocks here. Let's look at the fangs, right? I know we didn't I know we actually did cover a lot, but on the screen we didn't cover a lot, right? Today was a lot of like close your eyes and listen, to the discussion really. But with some visual assistance over here. But next week, right? Let's look at some of these fangs. Again, I'm going to be putting this all in my report every week. Meta over here, right? We're back below the 50 MA. It's quite a bit of battle, but earnings. What do we get? What did we have previously? We had earnings. We gapped up big, and then back down, selling pressure below the 50 MA. Facebook probably revisits this price right here, right? So I'm looking at. I mean, doesn't mean that this is a short right away. We could chop around, but I'm looking at. We're probably we're gonna visit this 420 area. Uh, Evan says I was late today. Did we cover bonds and dollars and commodities? We did not cover bonds yet, but we could cover that. So okay, let's go to bonds, right? If you want to look at the macro, I mean, I cover all these like every week. It's just not in here because we talk about what's what's an interesting topic for everyone. But we look at bonds, right? Man, look at this. This is crazy. Like across the board, the bond market spiking, spiking. So what does that mean? It means that rates are dropping hard, right? What does that mean? It means like I think there's fear among central banks. Because like I think the way central banks work is that I mean again I need to validate this, but during times of emergency they use their discretion, right? And so we saw rates like really go down. Now this could just be the markets. I don't know who's transacting on the back end, but the markets are buying up the bonds because there's fear, right? The VIX is also at 20. VIX is high. The 10-year note right here is spiking, but what we could do is use the iShares, BlackRock's iShares 20 plus year ETF, bond ETF right here. I think this is the most widely looked at one. And we can see that this is like a nice, symmetrical triangle breakout right here, moving higher up on volume as well. So this is an indication of that, there's demand for bonds because, fear is high, right? It's looking pretty scary out there, and we could kind of confirm that. So that's what happened with bonds. We could go over to futures over here real quick and look at currencies. I'll show you what happened to the dollar, right? Because excuse me, we clicked on the Nasdaq. Got to go currencies over here. When is the next bond issuance? I mean, we could Google that and look it up. I look at the balance sheet, and then, but you're right. We should look at the issuance, right? Which basically means looking at the national debt because they're issuing on our behalf. Doesn't that sound wild, right? It's like, hey, yo, Evan, thanks for the credit card. I'm for the weekend. I'm going to Lake Tahoe with the boys, and drinks on me. Right? It's like I'm issuing you credit card debt on your behalf, Evan. Right? So the way we would track that is Fred public debt. Now that's the same analogy of like what's happening here, right? It's like they're issuing total public debt. Who are we? We are the public. Right? 34 trillion right here. So to answer your question right here, right? It's like, what's the trend of them issuing public debt? Right? So it's savage because it's like I know for a fact from teaching finance that 99%, even higher than 99% of people don't give a crap about this because this stuff is just boring to people, right? It's too abstracted. But like what I'm showing you right here is the biggest, like, in my opinion, the biggest, like, robbery event right here ever. It's just crazy. Like, since the day I was born over here, right? Like, it's just since the day I was born, it's just like you screwed me over. Like, this is proof that the day I was born, this thing just screwed me over, right? Unless I was invested, then unless I bet on the positive dynamics, then I then you helped me screwed everyone else over. But like, this is just crazy, right? This is showing public debt right here. So, it's just how much longer, right? I don't know. I, I really don't know how much longer, but I see that this is just going to make crypto go higher and higher because you basically put the solution that you made, that's the solution, right? Like, you made the Monopoly game not so fun anymore, so everyone's playing on their iPhones, right? As the examples we gave in the past. Evan says, yeah, buying some missiles. Thank you, thank you. 44% of every U.S. tax dollar goes to interest expense. I mean, I show you guys all those charts. We literally talk about it. Let me show you. Where is it? We talk about it left and right. We go in here and we open this up right here. I'll show you. We open this up right here. We go to macro analysis right here. And that's probably like the first chart that I show you right here and what we spend our money on. This is the chart right here, right? We'll open it up a little bit bigger. Sorry, you guys didn't see that. That's in the recording now. Sorry, that's on the marketing stuff, the AI marketing stuff. Let me see. Open image in new tab. Sure. Oh, all right, fine. I was hoping to be bigger. I'll make it bigger. So basically, look, like, all the dollars that comes in, right? And we don't even have enough, so we accumulate more debt. It's issued on the behalf of the public, in which the public is already dealing with inflation and dealing with higher taxes, right? And individual income taxes is the majority of it, right? And then all the things that they have to spend on, which is one is like the Social Security over here, and then the interest expenses from all the debt accumulated, which they issued on our behalf, and then healthcare, and then like you said right here, the missiles over here, right? So all that, and then you see education is there's no love in education over here. So I'm the educator over here, and this is where I'm making ends meet for the world right here. At least I think so, based off these numbers, right? So we talk about this. There's a lot of like knowledge nuggets in here, but you got to do the work of learning. I can't do that for you. I'm doing it for myself right now as we speak. V says this chart blows me away how little corporations contribute but make the bulk of the money. Kamala Harris. I like in a way, some of the tax proposals. I'm like, no, not the trader tax. Oh man. Well, it is what it is, right? It's like the moment you decide that you want to go become a corporation, the corporations get taxed like crazy. Then you're like, wow, like those previous corporations got grandfathered into the better periods. Um, oh wait, what am I doing right here? That's the weekly report. Uh, okay, let's see. We got 10 minutes left, guys. Any last questions before we call it a day here? I am getting pretty hungry. And I think we went over a lot of great principles and mantras about this market volatility. As you guys know, it's a lot of chop out there. I'll be writing up the report later tonight when I submit it. I try to submit it like, in the range of like 5 to 7 p.m. It takes me about 2 hours to write that report every week, and I know Edward asked me like, hey, you can automate this, but I personally want to write the report and spend the 2 hours so that I know I'm just registering the data in my mind. So it's really about just my own, discretionary interpretation and practice, building up that experiential database, right? I know you can't replace that, and this is the work that we have to do on the screen here to kind of get to that level of understanding, I think. Um, Edward gave 2 thumbs up. The fangs, yes. So without all the time, let's look at the fangs. I do want to look at the fangs. We can use a proxy ETN right here. You can just tell the fangs are bleeding out. So again, FNGU is an ETN that represents the fangs essentially. We could, oh wait, no, we can't. It doesn't show the pie split. But basically, look at the decline right here. I mean, this is going to move a lot because it's a triple leverage, but this thing's down 40%, right? So you could tell like most of the fangs are just beat up right now. So let's take a closer look. Apple is probably one of the few that's holding up. Uh, Evan says, "Oh my God, FNGU." Evan says, "Meh, I can look at them too, but I feel like I distracted you." No, it's all good. Um, so yeah, Apple right here, right below. I mean, first level of risk violated right here, right? So risk managed right there, and look at that. I mean, it even came back and put a large wick, shadow wick on this, right at the 20 MA. Right, these levels work, guys. So the levels work, and you got some support right here on that trend line, right? It might, break that support. It's gonna go to 50 MA next. So Apple is hanging on right there, right? Not looking great. That's Apple. We go over to Facebook where we looked at Amazon, right? Man, I was on the long side on Amazon like before this whole sell-off thing, but luckily, I got stopped out. I stopped out over here, right? But I didn't go short, right? I attempted to go long, but it is what it is. So look at this earnings gap down, amazing, right? Amazon already, if you measure from high to low, look at that, it already touched 20%. Amazon already declined 20%, but it seems like we might go like I don't know. I mean, this thing has a large gap to fill right here as well. Um, one thing to analyze is that it could open and it gaps up, but the question is how much of this gap will it fill, right? So if I were to measure the gap from close to, well, I should do close to close, right? So we'll do close right here, right? So we measure the gap and see. I know it's kind of hard to see, but we measure the gap of like the retracement. So typically, if it's like, you know, so this is the Fibonacci retracement, right? It's a fascinating tool. I encourage you to study it. We'll talk more about it in the FinViz Club platform. But essentially, like, when we have a gap like this, you can measure the gap. And the gap could go like, if it goes like to a number like 23.6, then that's very weak, right? Sometimes the gap will go up and you get 38.2, very common. That's also considered weak, right? And then 50% is like 50-50 at that point, right? If you get a bounce, it goes to 50, then, it could just go like this, right? So that's a 50% move. And then at most, it should go for the trend to continue is 61.8, right? For the trend to continue to go this way, is what I'm saying. Um, but if it starts to go up here, right, after 61.8, then there's actually a higher probability, if I recall, for it to go towards the 100%. So that's when like again, it's like however you want to play this, like, oh, it's a 61.8, I'm going to short it right here, or it goes above 61.8, I'm actually going to go long because this market's actually stronger than we thought. Um, so yeah, that could be a scenario. And again, like you get better by just practicing. So we just gotta practice. So there could be a bounce right here because I do see red light imminent bounce, just because everything's like really sold off, like Japanese markets, European markets. Again, we'll get the next data point tonight with the futures market. But let's go over to Netflix over here. All right, let's look at Netflix. All right, we got 90 folks in the platform now, right? After this, it locks up at 100. I haven't figured out the pricing yet, but I was thinking of just making it friendly, like $10. I was really gonna do $20 because I mean, like everyone else is just charging like crazy. I'm priced well below under market right now. But then like sometimes like it takes a high price for people to like pay attention to, right? So I don't know. We'll see. Um, uh, so Netflix right here. Wow, look at this. Tight orderly selling action right here. Right? That's orderly right there. So let's edit this. Right? Orderly. Who could do orderly? Mom and pop? I'm being sarcastic. Right? Very oh man. Sorry, I'm like editing the charts right here. This is very orderly, right? Orderly because it's like up to this price sell off, up to this price sell off, up to this price sell off. Orderly stocks can only be orderly transacted by a player of sizable character, right? It's very orderly. So it suggests to me that some player is trying to get out quietly without painting the charts, right? Things that you'll only know when you become a big player and you realize like, oh man, I'm actually drawing out the charts, right? I'm actually making the bear flags and the bull flags or the channels and the cup and handles and the wedges and all that, right? Uh, and the harmonic shark patterns or whatever. So yeah, like this is like orderly selling right here, right? It could go either way, but obviously the trend is down. It's probably gonna go lower. But yeah, that's definitely not me, by the way. That's not me coming back trying to knock this down, right? Like, oh, short here again, short here again, short here again, short here again. No, no, that's a lot of money right there. Google. Let's look at Google right here. Well, I'm thinking about what should be the title of like today's recording. Like this is actually a really informative session. Like probably one of the best. I'm trying to think of the title for this one. It's like volatility events or analyzing, best practices around volatility events or something. Google right here, man, just dirty. Look at that. No respect right there of the 100 MA. So not looking too good right there, right? So this thing could, again, I know it's hard. It has to be hard, but it's suggestive that 160 next, right? Let's use the prior breakout right there at the gap, prior gap right there. Let's just put a target at 160. Right? It's really levels to levels, right? You can't really put a level too far out because then you're disregarding the potential bounce at a certain level, right? But if I were to put something far out, right, I need to consider like, all right, what's the play here, right? Because it could definitely go something like that, definitely something like that before it finally hits the 200-day moving average, right? But we have the general trend, right? If we know the general trend, because again, the trend is your friend, and there's like midterm trends and long-term trends, but the trend is your friend right here. And again, I'm not the greatest at drawing trends because I know it's subjective, but the objective rule is that they say 2 points make a trend line, right? So it just takes 2 points to make a trend line, and the more points you have connected to it, the stronger the trend line, right? Obviously, we have a descending broadening wedge right here, right? So that's the current like pattern that we're in right there. Um, but yeah, uh, that's actually considered bullish, right? So if you Google it, descending broadening wedge, right? But bullish once it crosses over a certain trend line. So we go over here, right? So this is the descending. So you see right here, descending broadening wedge. That's considered bullish. Right? You can always Google this stuff up. This knowledge is public, right? Declining, declining, descending, broadening, and then break out to the upside, right? So we go back to Google right here. I mean, to me, it's just like that's just oversold, right? Um, but yeah, that's what it's looking like right there for Google. Um, Microsoft. Right? We're looking at some big players right here. I know it's 12 o'clock. I'm gonna hop off soon right here. Hope you guys enjoyed the session today. Look at that. Look at this orderly selling right there, all the way down. 2 points make a trend line, right, right there. Same thing, right? So we know that it could bounce right here on the 200 MA, start come out, and then that could be the start of reversal right there. That could be the case, or we could have a scare and it'll go lower, right? That's just how markets are. So could be a scenario right there for Microsoft. What other stocks? What other stocks? Last one. Give me a stock, guys. Last one. What's the last stock that we should look at before I go and maybe drink some kefir or some goat milk? Goat milk is actually pretty hardcore to drink. But I got some raw kefir. Okay, I'll do both. I'll do Reddit and crypto. I'll do both. So Reddit right here is a short now, right? Why? Because it didn't hold my trend line anymore. I was long. Trust me, I was long, but I got stopped out. I got stopped out somewhere right here, and then now break up the trend line right there. So short, and then now we're below that 50 MA. Earnings coming up, it makes it difficult. We do have earnings next week, so that's why it's going to be hard. But what's for sure next week is volatility, either to the upside or downside. Downside. If you have time, XLK. Yeah, no, I'll do XLK as well. Hey, you guys could just dump stocks on me anytime you want. I will analyze them. I actually pray that you guys dump stocks on me. But for V right here, Reddit major resistance line right here, right? This because you have several levels prior that showed resistance, right, coming back up. So look at that resistance right there again. So we know that this is a major level that for me I wouldn't be interested in long unless we're over this right here because there's massive supply right there. It's showing that some same player or a group of same player they keep coming back and selling this level 65. So as long as we're below 65, it's going to continue to be bearish. And so now we need to redraw the trends to show that okay, maybe again it's going to get sloppy, but I'm going to try and fit the majority of it right there, right? Just fit the majority of it in there. It's obviously in a decline right there. So majority would be right there, right? So we're channeling down right now, and red would be the major supply. Supply, yeah, this is the supply zone right here that they're dumping right here in that red area. So we need to clear that red area to know that that supply got absorbed essentially, right? Sellers getting absorbed is bullish if you think about it. Crypto. So looking at crypto, I mean, so right now, Lily, like the whole entire markets are doing bad, right? It's a volatility event, so it hurts everyone. So almost nowhere to be safe. And crypto is not protected by the government, right? So you know what that means? More than 20% sell-offs. So if you think about it, the stock market's protected by the government, right? So then I think like a 20, 30% sell-off, then we go and maneuver interest rates. So if it's protected by the governments, there's a limitation to how much the stock market could decline, even with the circuit breakers too. Now in crypto, there is no government. It's decentralized, baby. So because it's decentralized governance, or essentially, right, then sky's the limit in terms of declines. So you gotta understand there's different things to it, and we look at the whale. There's a massive whale right here, right? You see that whale right there, whale area, and it's failed. So that is below the 200-day moving average, and that suggests that's very bearish, right? I would be holding a short bias because of this current, setup right here. I see that the supply of buyers were basically eclipsed by the supply of sellers. So this is, a red zone right here, and it's below the red zone, which is very bearish right there. So it needs to get back over 60K and show me that okay, it's these players right here who are accumulating it has still power in holding it, but if not, then it's probably going to go into the next area right here, which is the next area of accumulation. At least we could see right here. Yeah, this area right here. So Bitcoin could go down to like 45, 45K, 40K. And if that's the case, everything else will follow through because Bitcoin and Ethereum are like basically the S&P 500 and Nasdaq, right? So same thing here, right? This is looking actually very ugly. So crypto, Ethereum could go down to probably this level right here, right? Because you see a lot of supply right here. So a lot of demand right here. So 22K, 2200, I'm sorry, not 22K. So yeah, crypto probably decline. I mean, red everywhere, right? Of course, this is getting a little oversold. It could bounce as well, bounce to like 3,000, but I'm anticipating lower prices. Well below the 200-day moving average on there as well. And then XLK. I mean, yeah, this is kind of like the fangs, but yeah, we can look at XLK definitely. So XLK right here as well, right? Again, most of the juice in the downside have been squeezed, maybe, but then we never know, right? I don't want to say guarantee, but this is what it looks like on the downside right there. So we could bounce around, right, on the 200 MA. It could go something like that. Maybe it could come out, or if it doesn't come out, right, the other scenario could, we just continue to be channeling down. So two possible scenarios right there. All right. So let's see. I do expect the bounce up here, and then the bounce up here, I'll be uh, changing short, but you definitely have resistance right here. 210 prior support becomes resistance, right? This was prior resistance that later became support, and now it's going to be resistance again, right? Prior resistance became support right here, and then now it broke support, and it's going to be resistance again. So now we know that 210 is a major area in this right here, right? And those players, again, XLK tracks technology, and those players will logically react to if buyers come in, they will knock up that area or knock it down. V says, thank you for another valuable session, Kay. Have a great rest of your Sunday and week. Live long and prosper. Thank you, V. Appreciate you, man. All right, guys. I think that's all the stocks you guys want me to look at. I talked a lot today. Hopefully, it was timely in terms of like sharing with you my experience in different volatility cycles and just letting you know, like, hey, this is another volatility cycle added to the books, right? That's how we get better. So I know it's gonna be hard, but if you practice great risk management, I think you should have the biggest smile on planet Earth. You just practice risk management. That's the only thing. Um, I think that's the only thing we really need. All right, guys. Any last questions before I hop off here? If not, then I'm getting pretty hungry. It's lunchtime. I've been fasting, so my practice is pretty consistent with eating after 12. Helps me lose a lot of weight. All right, looks like no more questions, and I know we're pretty talked out. Thank you for an informative session. You're welcome, Liz. Uh, hopefully, I'll be online throughout the week. You guys already know where I'm going to be, right? Online throughout the week here, posting ideas and sharing stuff. So join before we get 100 because that's when the price tag, the paywall comes in. Then, you know, I mean, it's pretty generous for the first 100 people. It's free. So join while you can. Okay, I only got 10 spots left. And if you've been with me for a long time, just reach out and let me know. Like I'll let you in for free because like if I know you personally, like hey, like just that's what they call in Chinese guanxi, right? Or connections. So you can if you engage with me, you're connected with me. I'm always gonna treat you better. I'm human. I'm human too, right? So come join the club before we get full. 9 spots left. All right, guys. Thanks so much for joining the session. I will catch you guys next week, and I'll be online here posting all ideas, insights, and having discussions because I really want to get better. So join the club. Have a good night, guys. I will catch you all next week, or on.